Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Hello. That sounded very, very bad, but hello, and welcome back. I am Ted. You are here watching Bodies and Wicks, which is my little podcast idea thing that I have. A body and a wick makes up a candle. I thought it was very, very clever. You probably should too if you're a smart person. But anyways, if you haven't seen my videos before, you get to hear my dry humor, which isn't very funny. But you also get to see me make analysis on Forex, indices, precious metals, things that you more than likely would trade, on like an MT4 platform or something like that. So take it for what it's worth. I don't have anything fancy. I don't have any cool like graphics or effects. I do have this thing called OBS, and I got a MacBook, and I just try to do what I can with it. I got a TV behind me. Look, I put a graphic on that, and that's pretty cool. Yep, I got that there. It shows you what we're going to be talking about. We are going to be talking about GBPUSD or cable. And mainly because the other ones I've talked about already. If you haven't seen them, I talked about Euro USD. I talked about NZD USD, and mainly because they're all at this interesting place. Actually, a lot of the USD pairs are at a very, very interesting crossroads, and even USD CAD. Really, they're like in somewhat breakout mode. But they're also not at the same time, just because of what's been happening with the dollar lately. But yeah, before I guess I get any farther, if you like what's been going on in my channel, and you want to hear more, go ahead and you can click that subscribe button. I think it's somewhere down here. What I see other people do is they point there and they go, "Hey, subscribe to my channel." So I'll do that too. Point somewhere over here. Subscribe to it if you can. And hit the notification bell. I think that's what other people say too. But yeah, if you want to support me and support my work, and give me some ideas of what you would like to see, what you want me to go over, and drop me some comments. You can also find me on TradingView. I'm at Tedsley on TradingView, or that same thing on Telegram. If you want to share ideas, whatnot, I'm a pretty open person. I like to draw on charts. Basically, is what I really like to do. They're kind of fun to just draw on. So speaking of that, let's just go ahead and start drawing on some charts, should we? So let's head over to what we're going to be looking at today, which is going to be the GBPUSD. Right, so what I'm looking at now is the weekly chart. All right, let's go ahead and move this out of the way because we don't need that. So what we're looking at is a multi-year trend line going all the way back to 2007. And then we also have another trend line that I have designated here in red. That one kind of goes back to only a couple years, 2018. I also have basically right here, which is a supply zone. And we'll be getting into that once it gets a little bit closer. But as you can see, we are somewhere in this area, which we're getting close to these. We've broken one trend line actually, and we're still kind of far away from breaking another, but we have just well, we're kind of on the fence of breaking a trend line here. Let's just get a little bit closer so we can see. So this is the daily chart here. What we would need to see as far as this turning to go along. See, what the thing with this though is that prior to COVID, you could tell it was, kind of on its way to possibly switching directions, but it's been possibly switching directions since 2016, right? So in 2016, we also had another low at about the same time that we had a low here in 2020. It didn't work its way up, and then it just decided to come right back down. So actually, we've been kind of had a sideways motion with GBPUSD for about 4 years. But now we're kind of at the top of that. We're at a supply zone. Demand zone, because if there's too much demand, there's not enough supply. Too much supply and not enough demand, then you sell it, right? You sell it so there can be more demand for it. But right now we probably have too much supply. So let's dig a little bit deeper into it to the 4-hour chart, and I have my 4-hour chart drawn up so very much that I'm sorry if this makes your head hurt, but this is what I'll be going over. So I also study a lot of smart money concepts, and basically what smart money is that when you're trying to find when the institutions, the large banks are in play, because if you look up who are the largest players in Forex, you'll find out that it's Chase Bank, and I think it's the Dutch Bank, and HSBC, all these different major banks that are across the world. They basically have traders that trade for them. They can control the market basically. So what they'll do is they'll leave clues behind as to where they've been, and then we can kind of predict where they might be going next. And some of it has to do with Fibonacci, some of it doesn't. Some of it has to do with primarily order blocks, or you can kind of see where they like to sell to buy and buy to sell. And I think that's the main theme of the institutional trading, right? The institutional trading is they're more of a buy to sell, sell to buy, because once they get themselves in a better position, they can make more money, from having a better position, if they were just to lose just a little bit, and I think we've seen those plays here, especially in the pound versus the dollar, especially when it came to around this area right here. I'll draw this out. This right here was definitely some smart money that was in play, and it did hit a trend line, so that's where this blue line is coming in. Well, I guess it wasn't a trend line until it actually made one, to be honest. But it did try to struggle to get across that trend line for just a second, but then it took off. But prior to that, it actually wasn't a trend line. I drew that there to see if it would actually cause some trouble trying to cross here, and it did for 2 bars, maybe 3 bars, something like that, on the 4-hour chart. And then after that, it didn't really make much trouble since. But what happened was that you saw this huge 4-hour bar that was basically just a sell. And this is also probably about the time that the US dollar was actually just falling. So throughout the entire month of July, the dollar was just falling and falling and falling. So for the GBPUSD to actually kind of turn around and go against the dollar, whatever it was falling the entire time, is a little odd. So generally, whenever you see that, it's because the institutions are in play. They sell. Then they'll convince the retail traders to sell, and then they'll get in a better position, and then they will buy. Now, the thing is that they're usually still holding that position. It could be somewhere probably like around here. So they do the same thing. They sell. They get to that position that they were holding. They release that position. They buy. They're still holding a position. They do the same thing and over and over and over again. Well, Thing is that I don't know if they're still holding a position down here since they haven't made it down here. But my guess is that they probably would have by now, considering we're pretty far away from there. However, what we're seeing here, this big red line right here, right? So this is that newest trend line that I was showing you on the daily chart. So that's this red line that we're looking at here. We have just, it caused a little bit of trouble, bounced off of it. Now it's finally above it, and then went below it, broke above it, and now we've closed below it. So we are still below this, this 2-year trend line that's been going on. And right now, what we're kind of seeing, especially in the GBPUSD, ever since late July, the beginning of this month, is we've just been seeing sideways motion. So we've seen a lot of accumulation happen in this area. But what we've also seen is that, we almost formed a double top here. Smart money will tell you anytime there's a double top, a lot of people will be holding they're putting their sell limits here, just because it's kind of a common practice. Hey, if it's already done it twice, there's going to be a lot of resistance. Why not put the sell limit there and I'll make money off of it? Well, institutions definitely took control of that here, went right through it, took everybody out, stole all their money because they probably hit all their stop losses, and then got out of there. And then they did the same thing, except for this time they didn't make it all the way up. So people would probably had their stop losses, anything like that here, or maybe I don't really know what would have been the smart money play here. But it did definitely had to do with the dollar. Definitely had to do with the dollar. So, selling off toward the end of the week last week. It kind of. Dollar was like hit or miss. At the beginning of the week it took off, and then kind of the end of the week it went down, and then it went back up again. So I would say that's more indicative of the strength of the dollar and what it did, versus anything else. But what I did do is I marked off some areas. So you do have some order blocks down here to where there was these last sell to buy areas, and you usually see these in 4-hour blocks. Sometimes you'll see them, in smaller time frames, especially if they're like flat top candles, because that just tells you they kind of leave that as their mark, to let themselves know, hey, from this hour to this hour, or from this 4-hour to this 4-hour, we immediately switched. We got as low as we could, and we started, we started buying after we sold. That's kind of the clues they leave behind. Sometimes the retailers will still continue to sell, even though. And it'll give them in a better position to buy. They may put a small buy position in, and as soon as that 4-hour mark moves over, that's when they put the bulk of their money in, and then they'll continue the opposite way. So that's why I have these kind of areas marked out, because if we are going to see some kind of going long scenario to finally break out of this trap, because you can see right here is this supply zone. We're having there's too much supply, and I think that's why another reason the smart money people got in here. They took their money out. They got out because there is probably too much supply of the pound versus the dollar. You get back in that zone, they did it again. So they're gonna need to really get out of this zone before we're actually gonna see it go long. But that could take a while. It could take this week, I don't know. But in the intermediate time, what I'm looking at is a couple different key areas. First, I did throw this fib on here from the part where we actually made the new wave, going from this kind of big bull run here, and then once this bull run stopped and we started going sideways is when I threw the current fib on it. So I would expect it to come down. If we are going to see something go long, first you see this last down sell candle right here around this 1.304 area, 1.3048 area. Also, it is near the 71% fib line. So again, if you haven't watched my videos, 71% fib line is an area I watch. A lot of people rely on the 618. Institutions know that. They push it a little bit further, that way they can get a better discount. Because if you can buy something at 71% off versus 61% off, you actually buy it for a better price, right? So why not hit the 71% versus the 618? So that's why I look at the 71%, and luckily this just so happens to be right around there. So if I'm going to be looking to go long, I want to see the GBPUSD push down into this 1.3044 area, right before I would put in a long trade. Your stop loss wouldn't be much lower than that, maybe 30 pips less than that. Probably around 1.30172 is where I have this marked. Mainly because I didn't really see, well, I guess that's the last down candle, the last body of the down candle down here, just in case they were holding some positions in that last down candle. It could be at the very bottom. I usually don't go past the wicks because that's usually retail traders and not the institutions, and they'll back out because their positions are already done. They've released their positions. They are moving forward. If it does get past that, it's only 30 pips. You could be seeing it come down to this level down here. I have designated by the yellow line. Now, the reason I don't think it's going to come down here is because you do have this massive engulfing, bearish engulfing candle that came down to this area and then immediately sold. And this is what I'm talking about when I talk about smart money. I believe this is definitely a smart money play because they were probably holding some positions down in here. They sold, they got other people to sell. They got to that point, and then they bought and got out of Dodge, right? So they released those positions. But now we're just in the area of accumulation. We've been in accumulation for a couple weeks now. So now we're just waiting for a breakout point, right? Or we could be, especially if the strength of the dollar is going to come back in, we could be looking for more of the same. We could be looking for the GBPUSD to start going back down, start looking for shorts. And if that is the case, there really isn't a lot that I can identify up here as far as institutional trading is concerned. It wasn't easy to find one, but if I was gonna guess, it would be somewhere to be around the 3.24 area. But then again, that is almost like a trap. That's almost like a given that most retail traders are going to be putting their entries somewhere around there and their stop losses just somewhere just above it. So I don't believe that's it. I think if anything, we do have another basically kind of double top here, just like we did before. And I think I moved that just a little bit. I did. So we have, and when I put these here and I say it represents money, is because that's where people's monies are. That's literally where their sell limits are. Their stop losses are just above here. That's what we call liquidity, right? And if you can take out that liquidity, you're taking the money from the people that have put their sell limits in there, their stop losses. They get taken out. They lose their money. Guess who gets it? The banks, because the banks have the power to just basically overblow that whole area. So if they do that, then I would expect it, especially if they can get outside of this, the supply zone. We're looking at that becoming a demand zone. Once that becomes a demand zone, then we have a ways away. We're exposing a big, large area, right, to get to next. So if we look at how many pips that we're talking about here from this end of the supply zone to the next high, which is that last trend line, you're looking at, what is that, 220 pips? So you could be exposing a very, very large area that we could be going to next. Could also be getting close to the multi-year trend line too. So that could be the next area that gives us trouble. But first, you'd have to get outside of that area before we could even consider that. So that's why I'm looking at all the different possibilities in here that we've been struggling with over the last 2 weeks, because the GBPUSD has not been easy to trade. I know I myself have taken longs and it should have been shorts, and I took shorts and it should have been long. It's, I lost some money on the GBPUSD this week, that's for sure. Not a whole lot, because luckily I set my stop losses very little, and then once I do get out, guess what? It actually usually rips right through it, and I'm glad I didn't put too long of a stop loss, because it didn't end up going the other way, right? So, these are the kind of scenarios I'm looking at. Again, if it's going to go down below, which I think it's probably going to do, I don't think we're going to see the dollar gain too much more strength. It's just been kind of wonky lately. And if you look at where the dollar is, it's in between two major trend lines. Actually, if we want to, we can probably actually take a look at the dollar. Let me go ahead and save this really quick. That way we can kind of see what we're looking at. And before you trade any kind of dollar pair, I always suggest taking a look at what is going on with the dollar. So I kind of have two areas here that I have marked up. This 9.32 or 93.22 and the 93.34. I think we need to close, but these are huge areas of resistance that we need to have some closes above. Daily, 4 hourly, something like that, before we can start seeing some actual good momentum heading on upwards, because then we could possibly get back up to this 93.8 area, 93.9 area, so we can finally make a new high, because I think that's going to be the actual game changer. Is that we do have this this zero ABC wave here, and that could be indicative of some strength of the dollar, but I'm not going to hold my breath until I see that we can get above this 9.385 area-ish and close above this 9.385 area-ish. That way, I can kind of see the momentum start to change, because once we get back up to this area, as you can see, the 200 MA is moving in, and if we can get some strength above that, then we can probably get some strength to get above that 200 MA. And if you're wondering what these two white lines are, I can show you. This is the two lines I was telling you about. They are multi-year trend lines. Again, trend lines are, as one of my favorite people on the internet that also does these kind of videos says, trend lines are meant to be broken. And I really don't believe too much in trend lines. Anybody can put two points together and call it a trend line. You can do that anywhere. So trend lines generally don't hold a lot of weight. More so than does a support and resistance and a supply and demand. And generally, whenever you see a trend line, something being stopped by a trend line, surprisingly enough, it generally also has to do with some kind of fib retracement. So let's see if we can even kind of pull that off to see if that's even true. Yeah, so if we pull, from this one here back in February of 18, to a high in March 2020, as you can see, it hits that one, that 71% that I always love talking about. So again, goes past the 618 because everybody expects it to. It also shorts the 785 because everybody expects that one to be the one it goes to next. That's 71%. I'm telling you, if you do not watch the 71%, you are missing out, because that's what I watch the most. And that is generally where I actually hit most of my good trades, is when it comes down to that 71%. I've seen it happen more times than not. It happened on the SPX last week whenever it had that pullback. It didn't pull back to it closed above the 618. But, once it got to the 7-1, that's when all of a sudden it started slingshotting the other way. So the 71 fib line, I'm telling you guys, if you had not been watching the 71 fib line, please do. I guarantee you it's going to help you out. But yeah, that's what's happening with the dollar. So to me, since it hit the 71 fib line, who knows? We could probably see some strength. This is what's considered a discount. It's a discount from 2018. They could possibly start taking it long again. I'd heard that major institutions are shorting the dollar back in April, and that's probably because they wanted to buy it at a discount again. So started shorting it back in April. Maybe institutions are starting to pick it up again. I don't really know. But we'll have to see what the Fed is going to say and what the Fed's going to do. They came in and kind of changed things this week. With their minutes, I think they did something, I think it was like a Wednesday or something like that. And, they basically said the economic recovery could take a little bit longer than possible. But even then, we're still seeing a glimmer of hope for the dollar. It's not like it was in July. Because you can see, if we go to July, probably even before that, I can't remember the last time it even went up. June, so it kind of made a small upward movement in June, but geez, ever since July, it just tanked all the way down to August, which is interesting because, again, if we go back to the GBPUSD, that's not what happened. It went sideways, in July, or it went up, I guess you could say. Here, let's go back to the beginning of July here. So it did slowly make its way up, but it did have, some sideways movements as well. But it doesn't look like the dollar did going straight down. You would think the dollar going straight down would push the GBPUSD all the way up. But it didn't do that. So it tells you that, maybe the pound is kind of struggling as well. In some areas, not in all areas. But again, aside from all that, aside from the far outlook, because we're at a point now to where this could be a good swing trade heading the opposite direction. Going back to what it was back in 2008, 2007, 2008, which is actually funny. I was actually in England, and it was this time. Actually, that wasn't that bad. It was, I know it was New Year's 2008. No, it was New Year's 2009, 2010. That's right. So somewhere around in here is where I was there. I felt like the price was definitely a lot higher than 1.6. The conversion rate was a lot higher than 1.68, because I know that my dollar did not go very far when I was over in England. But now, like I said, we're at that point where, if we cross this multi-year trend line, and you could see, again, and it's probably going to take a while before it gets there, but, something like this, well, if it would even do it the right way that I wanted to do it, crossing this trend line, going back over here, maybe even hitting one of these, these smart money levels that I was talking about. If it could get above here, come back down to one of these smart money levels, and then you might see it take off. So, and generally that's what, swing traders look for, or even position traders. You wait for that trend line to break. Once that trend line breaks, and you wait for that ABC, you wait for it to make a new high, and then boom, you take it long, and then you don't look back, because it could go long for a very long time. Because I don't think a lot of position traders or swing traders are looking for it down in this area, because I hadn't broken this trend line yet. But now we're getting close to breaking this trend line. People are actually getting excited about the thought of, hey, this could actually start going the opposite way soon. But as a holistic view, and that's a completely different topic. But on the matter of this week, I would say definitely watch this level. Watch the current 71. Again, because it hasn't hit that yet. well, it did, but it wasn't the 71 at the time. What was it at the time? Or what? Yeah, I guess it was the 71 at the time. I think about that. So hit the 71. Well, no, at the time I'm talking about here, that was just above the 618. But I don't think anybody was expecting it. Well, people probably were expecting it to go to 618, and guess what it did? It went down to the 71, and probably took some people out along the way. So again, more confirmation that the 71 is definitely a level that you want to watch. If we want to go to this one, looks like it was more the 785, but the first one that it hit was the 71. So again, 618 is always a good. Oh, I actually didn't do that correctly. Yeah, well, yeah, there it is. But still, 71. You know, you can place a trade on the 618 if you want. I would be a little bit more cautious of the 618 and definitely start looking at the 71 if you haven't. And you know, if we keep that same one there, just because we're going sideways, we just continue moving the Fibonacci up. I still think it's going to come down to the 7-1. I don't think we probably should be worrying about, you know, moving this Fibonacci over here, or you know, placing it on the current wave. I mean, I guess you could, and if that's the case, you're looking at this being where you might want it to see it come to, but we're already below it. What I would look for is to see if it can actually cross the 50 of where it's currently at. So if we want to put you know, a marking on that, here's the 50 here. If we can see it cross the 50, then I would say definitely start looking at these kind of areas for to short. But then again, be careful with that, because I think it could probably go straight through that. So again, I'm looking at more of a long type of situation. I'm not thinking the dollar is gonna get much better. So I am not that one. I'm looking at this one. And let me just get these things off the screen. I'm looking at the 1.304 area, 1.30, you know, 44 area, something like that. Once it goes there, I think I will be trying to take it long. But you know, we're gonna have to see how it reacts again in this supply zone, and see if we can make it through it. Anyways, that's enough for my rambling. I hope you guys got something out of this video. Again, if you like the video and you want to see more, what you can do is you can help me out by go ahead and hitting that subscribe button. I think, you know, like I said, people push down here. There's a button down there you can press. You get more of my dry humor. Maybe I'll become lively at one point, I don't know. But you'll get to hear my analysis, and you'll get to let me know what you think. Even if you think it sucks and you think I'm completely wrong, go ahead and tell me. I don't care. It'll make me a better trader. It might make you a better trader. It could make us all better traders. But what we could do is we could all live in perfect harmony if we all became better traders. But we got to beat the institutions, because they're the ones that control the market. I think we all know that, because how many times, you know, more than not, have we all lost money thinking that we're going to make a huge, awesome gain because we thought we had the perfect setup, and then we just got taken out. And that's because that's the institutions at play. So let's get smarter than them, and let's figure out how we can beat them, okay? Anyways, that's my video, and on GBPUSD, thank you for watching, and I'll try to make another one. I've made quite a few. If you want to, check out my one on you know, the SPX if you like trading indices. My favorite one, I made one on gold. I made one on NZD/USD. I just made one on Euro USD. And I think I want to do one on USD CAD, because we're also at an interesting place with USD CAD as well. So thanks again for watching, and I hope to see you guys in the next video. Thank you.
And I really mean that. Thank you. The bottom of my big one part.